please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This is Bazaar Morning Call, live from the CNBC TV18 headquarters in Mumbai.
Good morning. Welcome to Bazaar Morning Call. I'm Lata and with me is Sonia. We are still missing Anuj, still nursing a fever. But anyway, the markets at the moment in a very fine fettle, you will have to say. And the key reason why it appears that there is a resurgence of risk appetite is that the dollar is at, what is that, 3.5-week low, as you know, our flashes are telling you, at 93.9. I mean, we saw it almost get beyond 95 just about a week back. So this big fall in the dollar index has definitely unleashed a surge of buying across Asian markets, and I think we would also be the beneficiaries of this trend. You know, that said, even the Nifty, all of last week, and our technical experts were pointing out, below 10,700, there isn't follow-through selling. It's not pulling it lower. So there could be a little bit of buoyancy on account of that as well. But I want to just put two negative points on the table. One, of course, is the mutual fund numbers. It's not new. The market was being prepared for it. Every fund manager on the channel was telling you that June flows are likely to be lower than several of the previous months. It's 32% down. Now we have a number for it. And early morning today, we are also getting news that the July rains are 16% below normal as of now. So I'm just putting that on the table since we have had a lot of rural-related plays. Whether that would be a bit of a dampener.
Okay, well, good morning, Lata. But I guess, you know, the Asian markets are indicating that the start will be in the green. You spoke about the dollar. The US jobs data was very strong. That came in on Friday at 213,000 units. It was much higher than what the street was estimating. And all of that helped the Dow sort of rise about 100 odd points. You know, you can see it on your screen. Not just that, a lot of people believe that the trade war worries have now been shrugged off both by the US and by the Asian markets. But be that as it may, in our own markets, this is a very important week because earnings season kickstarts this week. Today, of course, we have a company like Dish TV. A lot of traders track that stock, so it will be watched closely. But tomorrow, there's TCS and IndusInd Bank. In fact, 3 Nifty companies this week: TCS, IndusInd Bank. Infosys comes out with its numbers on Friday. On Thursday, you have names like Sion, Karnataka Bank, etc. So it's going to be, I guess, earnings focus this week.
And we all know that this is that quarter when the earnings are going to look very good. I mean, we couldn't have had it better. We had a great base in the sense that it was both post-demo and GST base. So it was a pathetic base. And in any case, we saw the cyclical uptick in the fourth quarter itself. So this is going to be a great quarter of earnings. Is firmly put behind. That's what we will look forward to. But we've got some equity advice.
Yes, and lots of advice, you know, through the course of the morning. But first, let's take a look at what our wise men are telling us as we start trade today or start the show today. Jonathan Garner of Morgan Stanley says with macro risks likely to remain unresolved in the near term, they remain cautious. He further reduces the beta of their industry allocation recommendations. He says Morgan Stanley upgrades healthcare from underweight to overweight, increases their overweight in real estate and downgrades industrials to equal weight. Within India, overweight sectors are IT services, energy and capital goods, while they continue to be underweight the telecom sector.
Okay, well, telecom has not had any fans lately. Let's get to money market views. Pramit Brahmavat of Veracity says political uncertainty and mixed economic data from the US will keep the rupee range bound, but with a negative bias. He expects top USD INR pair to trade in a range of 68.50 to 69. The negative bias is for the dollar. The USD INR, the rupee is likely to be a bit stronger today.
Okay, well, on the bonds, Ajay Magnolia of Edelweiss says, in the absence of major domestic triggers till the CPI inflation data release later in the week, gilts are expected to trade cautiously as we begin the week. He says yields will track crude prices and the currency, while trading volumes are unlikely to pick up significantly. He expects the 10-year benchmark bond yield to trade in a range of 7.84 to 7.90% today.
Yes, but today the dominant cue is going to be the global cue, and for the world view, here's Nigel.
Well, the US markets ended in the green. All the three frontliners ended in the green, but the Nasdaq was a relative outperformer. That's telling you that, in fact, the tech stocks did very, very well. So some of those big gainers should come up for you in the screen, from the likes of Intel to Facebook. All of them did well in Friday's trading session. The big Q, though, was, in fact, the jobs report. So most of the investors out there, they shrugged aside the trade war fears and they focused on the jobs report. The number of jobs added was far more, but the unemployment rate was a tad bit higher. That could be because of higher participation. So it was more or less a mixed jobs report, because the wage growth as well climbed lower than expected. At the end of the day, well, the equity markets did well, but the dollar index cooled down, telling you that the street viewed it as more dovish than hawkish, because it came down to sub that 94 odd level. The European markets as well did well. All those three frontliners, they ended in the green. You had, the car makers that did well over there. There were reports that suggested that Trump may go easy on some of those European Union car imports into the United States, if in fact they go soft on the US imports as well into the European Union. So most of the car makers, they did well. And the reason that the German DAX did well was the two coalition parties, they reached a deal on immigration. Not just that, the economic data that came out of there as well looked quite good. That's the industrial production number, came in at around 2.5%. No worries for the Asian markets this morning. All of them have opened up with good gains early this morning. So let's get the Asian markets up for you. And the SGX Nifty, that's indicating that we're likely to start off above the highs that we saw in Friday's trading session. A 60-point uptick is what we could brace ourselves for. Back to you all.
Okay, Nigel, thanks a lot for that. So good global cues coming in, but the local cues don't look that good. The market volatility seems to have had some impact on investment flows and mutual funds, definitely. Something that experts have been telling us for a while. The equity fund inflows actually saw a 32% drop in the month of June versus the month of May. Surbhi is right here to analyze the trends for us. Hi, Surbhi. Morning.
Morning, Sonia. Morning, Lata. Well, I guess as you put it, it's really sobering data that we have to sort of contend with. And the trends are very clear, especially if you look at the monthly sort of numbers. They have been dwindling ever since LTCG came through and the market entered this volatile phase. To run through the numbers, we're down 32% in the equity category. Now, that includes pure equity fund inflows, arbitrage fund inflows, and I'm also counting in the ELSS money when I'm looking at the total figure, which stands at about 8,200. This figure last month was about 12,000 crores. So that's how the decline has come about. These numbers are very flat if you compare it to June year on year. I also went a year back in time to just for seasonality. Coming down to arbitrage, now that's been the hit this time because there's an outflow of nearly 1,400 crores from arbitrage funds. That's why the equity number is looking bad. ELSS, mixed picture. The number is slightly lower if you look at pure ELSS. That's the SIP, sticky money that you and I invest in. It comes in at 866 crores. It was 906 crores in the previous month. But year on year, ELSS flows are still good. They're still up 22%. So that's the saving grace. Finally, speaking of the silver lining, it's really the ETF money that was pumped in with the subscriptions to the Bharat 22 ETF. That's why the ETF number for this month has surged to over 8,300 crores. I mean, it pales in comparison with the 2,600 odd we did last month, some 1,300 odd last year. But gradually, ETFs as a category is improving because even the EPFO is putting in a lot of money through the ETF route. Last but not the least, LTCG tax has been a death knell of sorts for balanced funds. This was such a strong category all of 2017, and the dwindling trends continue this time around as well. So on balanced funds, we are down 44% month on month over May, and we're down 80% year on year. The balanced inflow is only about 15, just less than 1,500 crores, because now with the dividend tax coming in, the LTCG tax coming in, balanced funds just aren't making that kind of sense. So overall, yeah, numbers not something that the market can take too much heart from for the month of June.
But the pure equity flows that you're speaking about are adjusted for the ETF, for the Bharat 22?
Yeah. So that pure equity number, the 32%
includes
drop,
the ETF.
It does not include the ETF.
No, then I think you shouldn't worry, because probably some of the money that was otherwise intended for equity flows went to Bharat 22. So the overall flow is not so bad.
So I mean, the market is also a little confused. The analysis is cut in, these numbers are dissected in many ways. I personally prefer to add the equity ETF money because it's equity money at the end of the day. And largely speaking, money will come in through this route because as a market, we are getting a little more sophisticated, understanding index funds and ETFs as a product. So increasingly, I think to get a holistic picture, it's a good idea to even add ETF money into the pure flows.
In which case, it's not so.
Rally that you're seeing across the Asian markets this morning, maybe it's you know, the pent-up release of that relief rally post the trade war fears receding. Look at that. Hong Kong market is up almost 400 points this morning, and the SGX Nifty also indicating the start will be in the green. I guess the tariffs have now taken a back seat, at least for the time being. Our research team is here to give you the list of top 10 stocks to watch for the trading day. So let's drill it down to the specifics now. Nigel is with us. He's watching Tata Steel this morning. Hi, Nigel. Morning.
Well, morning, Sonia. Tata Steel, the production numbers for the first quarter did come out, and the sales numbers as well. So the provisional numbers look quite good. The growth in the Indian operations is around 8%, so that's fairly good. While Europe as well as Southeast Asia, they were more or less flattish. These numbers are on expected lines, but if you read it, it'll be with a mild positive bias. So expect Tata Steel to open up in the green.
Okay, thanks a lot for that. A mild positive. Anisha, JP Associates on your radar?
Well, yes, otherwise the company has been plagued by debt issues and legal battles, but today I have a good news because the company has bagged an order worth around 2,850 crores. Now remember, this is for a EPC project for construction of a hydroelectric plant in Jammu and Kashmir. The construction period is around 66 months. So positive news because this takes the order book to around 14,000 odd crores. But interesting to see how will they manage the funding of this order, though it is an order coming from a company which is SPV of a lot of government companies as well. Back to you.
Okay, thanks for that. So big order coming in over there. But AU Small Finance will also be in focus. Abhishek is here to tell us why. Abhishek?
Well, Sonia, pre-IPO lock-in shares will come to, trading platform today. So total amount of 17 crore shares that can come out of the pre-lock-in, and that includes 9 crore of promoters and 8 crore of non-promoters. So therefore, technically 8 crore shares can come in for trading today and can see a selling pressure. However, not and the entire 8 crore can be for selling because they include long-term investors like Warburg, IFC, etc. This 8 crore shares forms 28% of the equity. Back to you.
Okay, that's important. AU Small Finance, the lock-in shares come, but why would anyone want to sell? I mean, it's AU Finance has been good value for money. Rima, Sterlite Technologies on your radar?
Yes, Lata. They made an acquisition of an Italian company which also makes specialized optical fiber cables as well as copper cables. So the total value of the deal is $47 million, 47 million euros. That's about 380 crore rupees. What does this do for Sterlite Technology? One, it gives it access to European markets. Secondly, augments its product portfolio. And thirdly, it adds to its cabling capacity to the tune of 3 million, which can be further expanded to about 5 million kilometers. According to the company, the deal will be EPS accretive from day one. Axis Capital is written on the note on the acquisition. They say the IRR, or the internal rate of return, is expected to be above 20% for this particular acquisition.
Okay, thanks for that. So that's going to be in focus, definitely. It was up almost 9% on Friday in any case. But let's find out more about Fortis. Ekta, it's in the news once again. Of course, the key, the key thing the street will focus on is who the final winner is.
Yes, absolutely, and that's the reason I expect the stock to probably be resilient, because the noise is getting louder that maybe the IHH possibility of an open offer will probably be something that the board would eventually choose between Manipal, TPG and IHH. But nonetheless, for today, the qualified opinion from the auditors has come through. They have not provided a conclusion based on the ongoing investigations, but like you mentioned, the bids will take, will be priority for Fortis.
Okay, well, let's wait and see what the bids, how the bids go. There is news in the Business Standard about the Shriram Group looking at merging two of their listed companies. Abhishek, just give us the details of that report.
Well, Lata, news reports suggest that Shriram Group may merge two of its listed entities, that is Shriram City Union Finance and Shriram Transport Finance. So IDFC Shriram Group merger didn't go away because it was too complex and the swap ratio was not favorable. So they may evaluate an internal merger eventually to list Shriram Capital. The management has mentioned, as per the news report, that they don't see much of an operational advantage in this merger. However, this is being done to list Shriram Capital. This is in line with what CNBC TV18 had reported last week about this deal.
Okay, thanks a lot for that. Well, finally, let's wrap this up with some stocks that are in the news this morning. Sonal, what do you have for us?
Good morning, Sonia. I'll start with CG Power. Well, the company will be in focus because along with some consortium partners, the company has installed its largest ever offshore transmission substation in Germany. Other stock that will be in focus is Cadila because Zydus has received a tentative approval from US FDA for oral suspension tablets. Other stock that will be in focus is Brigade Enterprises because along with UKN, they had announced launch of a residential project back in 2016, and on 7 July 2018, they finally launched the project. So I'll be looking out for that stock as well. Back to you.
Okay, thanks.
Yeah. No, I just want to say, did we cover Reliance Nippon in this? I guess there will be a bit of a... I mean, the mutual fund impact can be shown only in one stock, the listed Reliance Nippon. So there could be a bit of a negative impact on that stock as well.
Okay, we'll keep that in mind. We'll, of course, take this mutual fund story forward through the course of the morning. But for now, let's do a quick recap of all the stocks in focus today. Stocks with positive news flow: Tata Steel, JP Associates, Fortis Healthcare, Sterlite Tech, CG Power, Cadila Health and Brigade Enterprises, while the stocks with negative news flow: AU Small Finance, Shriram Transport, Shriram City Union and Reliance Nippon as well. On that note, let's listen in to some market opinion that we caught on Friday with regards to the volatility and the trading range that this market has been in. Ajay Srivastava of Dimensions Corporate Finance Services expects serious pain in mid-caps to continue. Take a look.
One must give credit to this market. The fact is that we have not broken down in spite of all the walls of worry, in spite of all the FI selling, in spite of all the negative news flowing in, the trade war, the Trump wars, the China issues. The fact is the market is not breaking down. And I think that's great strength and resilience in the market. Maybe liquidity, maybe just the fact that people are trapped into the market, they don't want to get out, or whatever you can call it. But the fact is the market is holding firm. So you could see serious pain in some of the mid-cap if the results are not expectations. So hang on to this one. This is going to be a rough ride in the next 45 days of the results. I don't think large cap will give you the big bumps. It's a small and mid-cap which may surprise you to the downside. A lot of people have neglected very easily the MNC pharma space. That's done phenomenally well, should do much better in the next 6 months or 9 months to come. When you say IT, yes, IT mid-caps have reached certain stage, but I think they still got a way to go. I think you've seen things like Tech Mahindra is the only one which climbed all the walls of worry. You've seen Emphasis, you've seen Alexi, etc. They are reaching a good point, not a bad place to even enter now.
All right. Well, of course, this is what we're going to discuss with our guests. But here's a very important programming note. The Brains Trust of Unit Trust India, UTI, Leo Puri, Vetri Subramaniam and Amandeep Chopra are going to join us at 10 a.m. onwards to talk about a whole host of issues. First of all, of course, the declining falls into equity mutual funds. And then, of course, the rupee, equity markets, bonds, and perhaps Leo Puri, a master at banking sector as well, a bit on this Sashakt plan, which has now captured the imagination of bankers. So